deliveries?
Generally, the maintenance, I would say, is it should be 50-50, if we say. But this 3,177 crore is just the car cost. It does not talk about the maintenance portion.
Okay. Shantanu, we were talking about the overall order. So what percentage of the order is going to be in terms of fixed, and how much of it is going to be the maintenance part of it, as you mentioned about 7 years and 15 years of maintenance?
You see the total order that we quoted, in that around 20% is the maintenance portion and 80% is the price of the rolling stock. So that's how it is there, and it's a part of the order itself.
Right.
Yeah. So as far as the maintenance is concerned, that will be definitely over a period of the time frame which is mentioned in the contract.
Right. So approximately it would be right to say that around 650 odd crores would be with regards to maintenance, and the remainder comes in terms of rolling stock.
Yes.
And if you talk about rolling stock, as you mentioned, you have a period of 4 years in terms of delivery. How much realization are you expecting in terms of execution every year for the next 4 years?
This year, there will be no realization, since the first proto is going to come out only in 25. So the realization will actually happen in the year 26-27, 25-26, and 26-27. So in these 2 years, we will have a realization of almost 50% each for the rolling stock portion.
Right. Now, overall, if you see in terms of the order book as well, around where does it stand currently with this order so far?
Currently, Hiral, we are at 12,800 crores, considering the Bangalore Metro contract as well. And in this, basically, the rail metro portion, if I may say, it is around 60%.
Okay. And how much is going to be executable in FY24 itself out of this 12,000 odd crores?
In FY24, the executable order is around 3,500 crores. And we are expecting some 1,000 more odd crores of orders this year, which can be executed this year, and that will all be from mining and construction.
Right. And overall, in terms of the backlog, how is that looking like?
The backlog in terms of?
The orders?
The backlog of orders, we started this year with around 9,000 crores of orders. We would expect that we will end this year at around 17,000 crores of order book. After we have executed, after we have got a sales revenue, which is around 25 to 30% more as compared to last year. So I can see further order book of 7,000 to 9,000 crores in the current financial year.
Right. Overall, if we were seeing the first quarter numbers as well, we did see weakness in terms of defense and aerospace, rail and metro in terms of the top line, as well as mining and construction. It wasn't single digits. Are you expecting a good recovery to come in on that front in the remainder of the year?
Yes, very much. In fact, we can expect a recovery in the second quarter itself. The challenge was that the defense orders, they came a bit late in the day for us. Number two was the supply chain challenges as far as the coverage of the material for the contracts that we had in hand were there. So for that particular reason, defense, definitely we did not do too well in the first quarter. We did okay in mining, construction, and in rail and metro, but we hope to end the current financial year with a landmark increase in defense and aerospace sales revenue, which we expect to be at least more than 70% as compared to last year.
Right. And overall, if you see from a strategy perspective, what is that expected to look like from here on in terms of growth, in terms of concentration of segments?
We can see a growth potential of around 25% CAGR year on year. riding mostly on the defense aerospace and rail and metro. Presently, the contribution of mining is the maximum. Last year, mining contributed around 50% to the top line, whereas defense contributed around 23% to the top line, rail metro contributed 27%. This year, our expectation is that defense and rail and metro put together will contribute around 55 to 58% of the top line, with the balance coming from mining. And in the years to come, in the coming 2 to 3 years, the contribution from defense, aerospace, as well as rail and metro would hover around 60 to 65%. Mining will stabilize at around 35%. But in absolute terms, definitely there will be a growth in the numbers of mining and construction as well.
Right. Moving on, I mean, what's the status with regards to privatization? Because, it seems that BEML is back on the table now.
Well, that's a question which is not for me to answer because BPAM is the agency responsible for the privatization. What I can say is that the intent of privatization is to unlock value. And we are now looking at growth. And with growth, growth is what will lead us to unlock value and create more value. And that is our job. And we are on that. We are on the job.
Right. All right. Thank you so much, Shantanu, for joining us on the show and sharing the views. And clearly, the path looks pretty healthy from here on, and the order book also pretty strong as we speak. Yeah. Thank you so much for joining us on the show. Speak to you soon again. Stay safe. Take care.
Thank you. Thank you. Bye.
So that's the management of BEML, clearly indicating as to what the 3,177 order win from Bengaluru Metro actually entails and what's the strategy going ahead with regards to where growth goes. A 25% CAGR growth is what the company continues to aim to achieve as well. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.